Hello everyone, it's Henry here again today. I appreciate every single one of you for tuning in today. So if you can hear me and can also see my screen very clearly, please let me know. If you cannot hear me, let me know as well so I can make sure that everyone can hear me perfectly well. So today's session, we're specifically going to be talking about continuation trend and also reversal. So it's basically continuation structure and versus the reversal structure. And why is this important? Why is it important to understand the continuation structure and also the reversal structure? The reason it's important is because it's ideal for us to know what the market is doing. Is the market going to continue with a trend, or is the market reversing? Because when you don't know what the market is doing, you're literally going to be going opposite to the direction of the market. So if we are in a reversal and you're thinking we're in a continuation trend, you could literally be buying when you should be selling. And how do you know that we are in a continuation trend? Now, the first way you can know is by using the higher time frame market structure. Now, if you understand that the higher time frame market structure is bullish, for example, now I'll just use Ethereum as an example. Now, if you go to Ethereum analysis right here, so right here, this is Ethereum. And if you go to the higher time frame, like the 12-month time frame, you can see that 12-month time frame is already showing us that long term we're bullish. 6-month time frame showing us that we are also bullish. 3-month time frame is also showing us that we are bullish. So that means we are anticipating for a continuation to the upside on the higher time frame. So whatever brings the market to the downside, what we're going to be looking for is continuation structure. We're going to be looking for the market to go from trending to the downside, creating lower highs and lower lows on the lower time frame from 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour. Once we see that 4-hour shift in market structure, when the market drops to the downside, that's already giving us a telltale sign that we should start looking for buy opportunities. I'll show you multiple examples. Now, you can see right here, this is an example where the market dumped to the downside. And when it dumped to the downside, created this low, everyone was massively bearish on Ethereum, anticipating that Ethereum is going to keep going to the downside, pretty much going to go to zero. Now, how do you know that this is a continuation structure? The first way is by understanding the long-term market structure, which is showing us that we're bullish. And number two, to take advantage of that price action, we want to see, example, a 4-hour break of structure, a daily break of structure, for us to start looking for opportunity for that continuation trend. Now, if we go to the 4-hour time frame, so let me take this back again 1 second to just mark out something. If we go to 3-month time frame, you can basically see that we have an imbalance here. You outline that imbalance because that is our point of interest where we're anticipating for price to use as support before a continuation to the upside. Now, when we take this to the daily time frame, on the daily time frame, on the 4-hour time frame, all we're looking for is a daily or a 4-hour break of structure. And right here, you can see very nicely how the market was trending to the downside, creating lower highs and lower lows, and a lower high and a lower low, and then a lower high, and then failed to create a lower low, created a lower high, and then created a lower low, and then created a lower high and a lower low right here, and we broke structure. After breaking this structure, all we're looking for is a retest for us to buy for a continuation to the upside, because now we're seeing that the long term is bullish, and all we're looking for is the short term, the 4 hour, the daily time frame, we're just looking for them to switch from bearish to bullish for that continuation market structure. And once we see this, that's when we're looking for buy opportunities, whether it's investing or trading. We're now getting into our positions from here, and our stop loss will be the low. So right here will be the stop loss. So I'll just have to take this out. So this is for a long position, and right here would be the entry. So because this is a this price action is very long time ago, so that's why it's acting a little bit weird. And because I also have the logarithmic turned on. So right here, the moment you see that daily break of structure or 4 hour break of structure, you're looking for opportunity for buys. And you can see how price came there, broke structure, retested, played around that position. And after that, you see what happened. After that, the market then eventually reversed and went straight to the upside, and potentially it's gonna smash the take profit as well. So now this is a typical example of continuation structure. I'm going to also show you example of reversal, but before we go into that, I'll just show you more examples for continuation structure, what that looks like. So let's take this off and go to another current price action. So right here, this right here as well, as you already know about this one, this was big Ethereum crash in 2022, and down here we crashed down into an imbalance, and you can already see that we were trending to the downside, consistently creating lower highs, lower low, lower highs, lower low, before we rallied after tapping an imbalance and broke a monthly high right there. And after breaking that monthly high right here, this is the monthly high, and you can see that right there after we broke that high. So let me put this on the high. So right here, after we broke that high from here, we came down for a retest, run on liquidity, expanded again, broke another monthly high, came down again for a retest inside an imbalance again. Now, how do you spot the continuation structure with this current price action? You can see that when we came down, we were creating lower highs and lower lows. This is a lower high, and this is a lower low, a lower high, a lower low, and then eventually we broke structure. And after breaking this structure significantly, what happened afterwards? So you can see price came back down for a retest inside what? Inside another imbalance right here. And then after that, we saw this impulsive rejection. So overall, I'm still bullish on Ethereum. I still want to see something like this on Ethereum to continue with that bullish market structure. So this is how you can spot that continuation structure from using the 4 hour to anticipate that the trend has shifted from bearish to bullish or from bullish to bearish. Now, I'll show you an example of what this also looks like from bearish perspective as well, because I like to teach people how to trade not just when the market is bullish, but also they know what to do when the market is bearish as well. So let's have a quick look using USD card. For example, on USD card, you can basically see that on USD card, it's literally been trending to the upside, creating right here. So we had this lower high, lower low, lower high, lower low, and then we created a lower high, and then we created this high. It wasn't really a high because this candle, this is weeks, it didn't close above here. So it came down, failed to create a lower low, created a higher low, failed to create a higher high, created another higher low, then rallied above and broke significant structure, created a higher high. And since then, we've been trending to the upside, consistently creating higher highs and higher lows. This isn't a higher high, but this is a higher low. But eventually, we'll continue to create higher highs and higher lows. Came down here, higher low, and then a higher high. And after that, as you can see very beautifully, our price dropped to the downside and broke this structure significantly. Now, the moment we see this break of structure down here, what are we looking for? All we're looking for now is an area of liquidity the price will retest before a continuation to the downside. And that area could be imbalance. It could also be last up close candles before the major drop to now run out this overall liquidity zones resting right here. So this is how you spot that continuation, because long term I'm very bearish on USD CAD on the long term perspective, because 12-month time frame, we're bearish on 12-month time frame. So if you want to have a look at that, this is the charts to use, FXCM. So you can basically see how that is playing out very nicely. So let me take all this out. So if you take this to the 12-month time frame, you can see that this is bearish. It was creating higher high, higher low, higher high, drop down, broke structure. So price coming up here, we're looking for either a daily, in fact, it's better to focus on a daily time frame break for you to confirm the trend shift, that the trend has shifted from bullish or bearish to bullish. So now you start looking for opportunity to short it. So this is what continuation structure looks like. So when you're already long-term bullish, all you're looking for is for price to come to a specific point of interest and then show you a significant break of structure like the daily for that continuation, so you can continue to trade with that long-term trend. Now, when it comes to reversal structure, how you can also anticipate a reversal structure is, firstly, you need to be using like a higher time frame point of interest to anticipate for a reversal. Now, higher time frame point of interest, I mean like a monthly. You can see this is a monthly imbalance, and you can see how price tapped it and reversed, even though it was bearish, consistently creating this massive down close candles, and then after tapping this imbalance here, and if you also use your Fibonacci from this range low to this range high, you can also see that this is extreme discount zone. So extreme discount zone and an imbalance on the higher time frame, these are two core things that join together. You need to be very careful trying to trade from those positions if you're trying to trade against it, because in this case, if you're trying to sell from here, you can see that your stop loss would have gotten wiped out, and after it got wiped out, it went straight into equilibrium, because this is extreme premium, extreme discount, and after that we went to equilibrium, rallied into premium, and then we're displacing lower again, because long term we're bearish. But coming down here, what you can see to anticipate a reversal from here is usually a 4-hour break of structure. But if you do see a daily break of structure, then you really need to be on the sidelines on that trade. If you're trying to trade against that reversal, you need to be on the sidelines. So I'll use this as an example. I'll just take it down so you can see what I mean. And right there, you can see after price came down into that position, it created a lower high, a lower low. And then right here, it rallied above that lower high. Even though it didn't break above that lower high, it eventually then rallied again and broke structure. So this right here is the reversal. This is a reversal market structure. But bear in mind that for a reversal can occur, but bear in mind that it's very short term. So the market could reverse. Most especially when the market reverses, is usually hunting for liquidity. For people that were trading with the trend, they want to run their stop losses, get them out of the trade before the market continues with the continuation trend, which is exactly what we're seeing right here. Because right here, the market basically was going towards the downside, consistently creating lower highs and lower lows, giving everyone beautiful sell opportunities until it tapped this imbalance inside extreme discount. And after that, it broke structure on the daily. Now, even if you wanted to keep selling, the moment you saw this break of structure on the daily time frame, that's already the market giving you a telltale sign that you need to start exiting your sell positions and just be on the sidelines, because there's basically going to be a major reversal that will take price to run out a lot of liquidities. And how do you also anticipate which liquidity zone price is coming to? You can use higher time frame points of interest, like an imbalance. Example, you can see that right here, there's an imbalance here, and then you see that there's a daily break of structure here. That's already giving you a telltale sign that price wants to go into that imbalance. That's the drawn liquidity, the magnet attracting price to come to that position. And if you take this to the 3-month time frame as well, you can also see that there's an imbalance inside there on the 3-month time frame. You can see that very clearly. imbalance, and we're rejecting off that imbalance. So these are things that will give you that confluence. So you know when to stay on the sidelines, when to stay away, or when you need to be taking a trade. So if you weren't confident on taking buys from here, you can just be on the sidelines instead of trying to trade something that you don't understand and end up losing money. So this is an example of a reversal, and I'll just show you another example of what reversal looks like using Ethereum as well. Now you can see on Ethereum, if you go to the daily time frame, you can see that Ethereum, we were basically trending to the upside, creating higher high, higher lows. And right here, after we created this higher low, created a higher high, a higher low, a higher high. And look what happened after that. Price played around, and then dropped and broke structure, a daily low. After breaking this structural low, that is giving you a telltale sign that price within a short-term perspective is going to reverse. And if you're already on a buy position, if you've not protected that trade, there's a very high chance it's going to run your stop and it will be a losing trade. And look what happened. Came off for a retest. And after that, boom, went straight down to run out all liquidity of people that were buying it, took all their stop losses. And after that, we're now seeing this rejection from that position. So this is what a reversal looks like. Now, the reversal, the one thing the reversal and the continuation structure have in common is the time frame break of structure, which is daily and the 4-hour. So when you see a daily break of structure, that's the market giving you a telltale sign. There's a very high chance it's going to reverse. Very high chance. It's not 100% all the time, but it's a very high probability it's going to reverse. On the short-term perspective, going to a discount zone, extreme discount zone before that continuation towards the overall trend. So that is if it's bullish. If it's bearish, the market reverses. It will want to go to extreme levels or into equilibrium below its either discount premium, and after that it will continue with the long-term trend. The reason is just to run liquidity, take out anyone who was aggressively buying it without using proper risk management, take them out, run out their liquidity before the market continues with the overall trend. So this is second example on reversal structure. And if you do have any questions based off my analysis, just feel free to let me know. You can drop your questions in the chat. You can also use the link in the description. So I left a lot of links in the description. You can use the link in the description to get my course, my Udemy course. That will help you as well. It will help you a whole lot. The last forex trading mentorship you ever need. So it was basically a mentorship I did with a lot of my students. And so many of them are advanced students. Some have very few months of experience. But that combination of both new traders and traders that are intermediate and advanced, the combination together helps any trader watching the course to have a better understanding of what to expect in trading and what to do to become a better trader. So if you can grab that, you can see the link in my description of this live. You will see the link there. If you click the link, you'll see the course. You go through it. If you have questions, just text me, or you can join the Telegram group. You can join my free Telegram. The link is down here as well. If you click on it, you go into my free Telegram and you will see there, I'm always there giving the traders in there lots of value. You also get the time schedule for every single one of our live sessions, but the ones we do on Zoom and the ones we do on YouTube as well. You get all the details, the time, what we'll talk about, so it will be better prepared. And you also get like trade recaps, the trades I've taken, the reason I've taken them. That will help you massively if you're no trader or even a trader struggling with consistency or just don't know how to build your own strategy. You can see the confluences that I'm using to take my trades inside the free Telegram. And also, if you want to use our recommended broker, CWG, you can also click the link there, sign up. They give you 100% deposit bonus, so up to $1,000. So that's pretty much it. If any of you want a one-on-one mentorship from me, just simply go into the Telegram and message me. And if there's any spaces left, I will let you know and see if my program is something that is going to help you to succeed in trading. So any questions at all, always remember to let me know. Please smash the like button. If you also enjoyed this today, you can share this with a friend. You can subscribe, click the notification bell, so anytime I go live, you'll get notified. I appreciate you all for tuning in today, and I'll speak to you all next time. Have a wonderful day.